Today, I am here to talk to you about a topic that has been making headlines all over the world. I am talking about the issue of banks running out of money. This is a serious issue that affects not just the banks, but also the entire global economy. In this video, I will explain the reasons behind this issue, the consequences, and what we can do to prevent it from happening. First, let us understand why banks are running out of money. The primary reason behind this issue is the increase in non-performing assets, NPAs, or bad loans. A non-performing asset is a loan or advance that has stopped generating income for the bank. These bad loans are a result of various factors such as economic slowdown, natural calamities, and the failure of the borrower to repay the loan. As the number of bad loans increases, the bank's ability to lend money decreases and its reserves deplete. The second reason is the low interest rate environment. The central banks of various countries have been keeping interest rates low to stimulate economic growth. However, this has also led to a decline in the interest income of banks. Banks earn money by charging a higher interest rate on the loans they lend than the interest rate they pay on the deposits they receive. With low interest rates, banks earn less income, which affects their liquidity. Another reason is the increase in withdrawals by depositors. In times of economic uncertainty, people tend to withdraw their money from banks and keep it in cash or invest it in other assets. This creates a run on the banks, leading to a shortage of liquidity. Now, let us understand the consequences of banks running out of money. The first consequence is that banks will not be able to lend money to businesses and individuals. This will lead to a slowdown in economic activity and a rise in unemployment. The second consequence is that banks will not be able to meet their obligations to depositors. This will lead to a loss of confidence in the banking system and a potential collapse of the financial system. So, what can we do to prevent banks from running out of money? The first solution is to address the issue of bad loans. Banks need to be more careful while lending money and ensure that borrowers have the ability to repay the loan. The second solution is to increase interest rates. This will help banks earn more income and improve their liquidity. The third solution is to increase deposit insurance coverage. This will ensure that depositors' money is safe even if the bank fails. In conclusion, the issue of banks running out of money is a serious one that needs to be addressed urgently. We need to take steps to prevent this from happening and ensure that banks remain stable and healthy. As individuals, we can do our part by being responsible while taking loans and investing our money wisely. Let us work together to ensure a strong and stable banking system that can support economic growth and prosperity. Stay tuned.